Hi, everyone. Good morning, good afternoon, and good evening, depending on your respective time zones. We're extremely glad that you've joined us today for the webinar on the topic Beyond ESG, Sustainable Finance, Energy Security, and the Future of Global Development. We believe that this is a conversation which is of crucial importance at this juncture because sustainability is no longer being defined from, say, exclusively an environmental perspective or, say, a corporate reporting perspective, right? But as discussions and conversations have been evolving, we're understanding that there are a lot of domains that are involved in this discussion, which includes but is not limited to, say, geopolitics, energy security, defense, investing, etc. So, considering the multifaceted nature of what sustainability entails, we believe that this could be a very crucial discussion to be engaged in at this moment. I'd just like to briefly introduce who we are. We are MLA College. We're UK-based distance learning specialists, and we also specialize in offering sustainability programs at both undergraduate and postgraduate levels, which are essentially formed by our partnership with UNITA, that is the United Nations Institute for Training and Research, and is essentially co-created keeping the broader SDG umbrella in mind while designing the curriculum. Now, I would not like to halt anymore in introducing our guest, Mr. Sasja Beslik, who is the Chief Investment Strategy Officer at SDG Impact Japan and one of the most respected voices today in sustainable finance across the world. He has an extremely rich and multifaceted career spanning more than 2 decades, having held senior leadership positions across some of Europe's leading financial institutions, which include Nordi, ABN AMRO, and J. Safra Saracen. Beyond that, he has also been at the forefront of the evolution of sustainable investing, which aligns with his current line of work as well. And he has helped shape how investors and institutions assess risk, allocate capital, and create long term value. So, Mr. Sasya, we're extremely delighted to have you on board.
Aryan, thank you very much for having me, and it's a great pleasure to be here. And I hope that we will have a great webinar on this topic or on the topics that we've been discussing. Yes.
Likewise, Mr. Sasyan. And just for the benefit of the attendees, we're extremely keen that we are as engaged during our conversation with,
Of
say,
course.
your opinions, your views as well. So, what we would like you to do as a part of your attendance is engage with us in terms of engaging on the chat box at the top, in terms of asking questions at the top, and we'll try to include as much of them as possible during our conversation. But starting off, we'd actually like to start off with the poll itself because we'd love to understand your perspective on what sustainability means to you. So, Mr. Sasya, if you don't mind, I'll just launch the poll.
Please.
So, the question is, how do you primarily view sustainability today?
Very interesting.
We do urge everyone to participate in the poll because that way we get a better understanding of where the pulse of the audience would be at. All right, I'll be closing the poll in 10 seconds, so please do cast your vote. Right. So, Mr. Sase, as you can see, in terms of the responses, the highest number of responses has been received for environmental responsibility, followed by a tie between business strategy and competitiveness, and risk management and resilience. And regulatory compliance seems to be lagging behind the other options. So, how do you deconstruct this?
I mean, this is very interesting because if you're looking at the headings, it's actually all of them. And if you're an investor, and I've been investor for so many years, when you're looking at this, you actually realize that people have associated sustainability much closer to the environmental responsibility and accountability. than with a core sort of a level of how the businesses need to run in terms of developing the right products and services, and also how competitive they are going to be. What is interesting is that risk management and resilience. I mean, if you're looking at sustainable investments from that angle, the risk management becomes much more important in the evaluation of the companies than I would say, the strategy. It's more how you understand the risk. So if company is running a business that is having a significant risk related to labor issues, I mean, there are many companies around the world that are running labor issues. I mean, in terms of the could be union representation, it could be illegal repercussions against the employees, long working hours, no living wages. All of these things are actually as important as the environmental responsibility when you make assessment of the company. And regulatory compliance, which this is also very interesting because you have parts of the world where European Union has its own regulation on EU taxonomy and how companies need to behave in that context. But it is very important because if companies do violate regulation, there are fines related to this, both in terms of the financial fines, but also reputational risk for the company. So it's all of them. But you can actually, in this, you can see where the sustainability movement has been most successful, which is on the environmental side. And I can subscribe to that. I can say yes. But sometimes we're missing the big part of other things that are relevant.
That's very interesting. So I believe our conversation today would actually then be uh, discussing this change in, say, this paradigm shift as well, right, in terms of viewing sustainability and what it entails within itself. So,
Yeah.
fortunately for me, this is a very good segue to the first question that I was going to ask you, which is that your core argument regarding sustainability has been that it is not, say, the end concern or the end issue itself, but rather it is symptomatic of deeper, say, economic or systemic issues, right? Is that something you'd like to elaborate on a bit more?
Sure. I mean, the underlying sort of underlying intent of sustainability has always been to include the cost of externalities and the opportunity of managing that cost into the businesses. So in our current economic model, externalities are socialized. You and I pay for them in terms of the taxes for the CO2, or taxes for energy or water or whatever we pay it for, and the profits are privatized. So the entire idea has been to bring the externalities in the economic system into the business, internalize them, so we can have a look and say, okay, but how holistic is this business model, and also what opportunities and what risk does it have. So that's the sort of an entire, I would say, intent of sustainability has been to bridge that gap.
This is interesting because when you mention, say, sustainability in this lens, uh, it encompasses more domains within it as well, right? Considering that it becomes more of a strategic issue, which involves, say, finance, which involves energy security, industry policy, and because geopolitics is essentially the underlying or informing core for all of these aspects, then fundamentally geopolitics as well, right?
Yes.
What do you believe has driven this shift in perceiving sustainability?
I think one of the major sort of reasons why sustainability has been, especially sustainable investments, have been increasing, and this is something that I want to mention to you. So currently in the world, about $33 trillion are managed under sustainability banner. And this has been growing for the last decade, and it's still growing, and it's growing in Europe, and it's growing in the US, although there's been a pushback, and it's growing very much in Southeast Asia. So one of the things that is very important is that sustainable investments has become more of a mainstream thing than the sort of a sidekick to the mainstream investments. And the reasons are following. You have the climate risk is becoming financial risk, and it's quite obvious for the financial industry that if you don't manage that risk, you are going to have a big trouble on generating returns, but also it will pose a big cost base on what you're already doing. Let me give you one example. So you have entire parts of the US, and now it's increasing in Europe, where the companies, where the housing, retail, the housing sort of a real estate sector cannot get insurances. So if you can't insure your property, you cannot get a mortgage on your property, and you cannot pay for that. And that is posing a significant risk. So, aside of all the fuzz around what ESG and sustainability is. There is reality, and in that reality, the sustainable investments are slowly growing, but they are shifting the I would say the skin a bit, because they are going from being a value based, I believe this is right thing to do, this is morally right thing to do, into something that is value creation based. So what kind of value does it create for you? And in my own experience, managing investments for so many years, I mean, I've seen the ups and downs, but the one thing I can sort of share is that, depending on your time horizon, you can actually generate very good returns by having that lens on you. And this is exactly what I want to tell you. So, I don't see very well without my glasses. So this is a mainstream investing. I see you, but I don't see everything. And this is a sustainable investment. So I see much better. I can make decisions. It's up to you to make that decision. You have the choices depending on what data and access to the information you want to have. And any normal investor will take any data available that will inform your investment decision better. So the more data you get in sustainability space, the better investment decisions you make, and you can actually see the risk and see the opportunity in a different way.
That's extremely interesting, and I'm glad to see we're aligned in terms of a sustainability perspective.
Yes,
Well,
yes, we are. We have the lenses on. Yeah, yeah.
of course, but I would like you to elaborate a bit more on this, because this is a radical shift in terms of how we view sustainability. And at least for, say, a layman like myself, it is not intuitively clear, when one first conceives of sustainability, right? So your fundamental thesis has been that it's a shift from, say, a value-based investing to value creation based investing, right? And understanding that, say, adopting sustainable practices or incorporating those frameworks is essentially generating value over the longer term horizon for any
Yes.
business. Is
Yes,
Yes.
yes. Let me give you an example of that. It's a very
Mhm.
good question. So, I said it moved from moral investors, moral investing, ethical investing. This is the right thing to do. We want to save the planet. This is very good because it's a long queue of people who want to save the planet. But it's moving from that into what products and services is this company developing, producing, that can compete with the competitors on providing products and services that are more sustainable in terms of the energy use, in terms of the water use, CO2 emissions, and so on. And reason why this shift is very important is that you have a companies, and I'm investing in some of these companies where bits and pieces of their products can reduce CO2 emissions or energy use, which has a tremendous impact on the capital cost base in the operations, and it has a tremendous impact on how the clients can sell further down the line their own products at the premium price. So it that particular sort of a shift from ethical thinking, we are doing the right thing, it's good to save the planet, all of that, which is good, into value creation. So how do you actually create value? And this is also part of the what I wanted to tell you about is the part of the shift of maturing sustainability investments over time. So because the investments have grown so much in 10 years, the quality control was not there. So you had a lot of asset managers, banks, institutions making a lot of commitments, making a lot of bold statements and all of these things, charging a premium for some of these ESG investments and so on. And that now is moving from that space, it's moving into a more mature phase where the real players who really do this for real will stay, and the tourists will leave because they have been just there for seeing the scenes.
This is interesting. So people who have put real skin in the game, right? They've been involved for a while.
Exactly.
They understand the market landscape. They understand the sort of returns that can accrue from having this long-term perspective. Are the people who will survive in this market over a longer-term horizon, correct?
That's correct. And one of the biggest challenges for sustainability in general and sustainable investments in particular is the time horizon. Because most of the investors most companies report on a quarterly basis, and most investors are evaluated on a monthly or quarterly basis. So if you think that you will integrate sustainability into your investment thinking, most of the realization of your sustainability efforts will come down the line maybe 2 or 3 or 4 years after you sort of start addressing that question to the companies. So the time horizon is a problem. And if you are an investor like I am, my time horizon is 3 to 5 years. So I'm not looking at the company from next quarter perspective or next 6 months. I'm looking at it from 3 to 5 years perspective to see where my engagement with the company to change things can lead to the results in 3 to 5 years. And that's a completely different, approach to investments in general compared to many others. And I also think the companies, if a company tells you that they will implement sustainability measures to address environment or labor issues or governance issues within a 1 year, that's not really how it works. It takes much longer time. So investment managers who are telling you that they can deliver you sustainability results within a year, that doesn't work that way. It takes much longer time.
I think this is very insightful because considering the fact that we were discussing about your own experience, right, from shifting from the European landscape to the Japanese landscape, how the process has been for you, how has the acclimatization gone for you? You mentioned that the society is fundamentally vertical in
Yes,
your current experience, right?
yes.
What I would like to actually pick up on is that considering that the returns are on a longer term horizon, how is that to be communicated to the leadership, which often looks to maximize efficiency, optimization, and therefore as quick returns as possible? Is there a sort of friction here that exists implicitly?
I used to use a analogy when it comes to Japan, and it's, for many people know this from the movies, and they've seen samurai warriors, and samurai warriors, they have a long knife, a long katana knife, and a short one. So that's the sort of how you can explain Japan. So you have a short perspective for the short fight, but then you have a long one for the longer perspective. And in Japan, but I also think in general in the world, the leadership of the companies, and I meet many of them, are pretty much aware of the fact that the sentiment for sustainability is here to stay, not because it's the right thing to do, but because it has an impact on the business. And as you in your poll sort of showed, yeah, it's regulation, it's the business strategy, products and services, it's the CO2 emissions, climate change that is becoming very financially tangible for companies. They can actually see it in their numbers. So all of these elements are making them aware. But now there are companies and companies. Some companies are much more long-term oriented and they want to create the value over time. Some companies are more trading related. They want to maximize the profits to get paid in a short time. It's at the end of the story, it's all about people. Investing, it's all about people. It's not about the company structure. It's more about who are the people who are taking the strategy and implementing the strategy in the business. What's the quality? What's the vision they have? What's the experience they have?
Right. So essentially, the right perspective on the part of the leadership is a crucial linchpin for the company
Yes,
adopting the right sort of investment strategies.
yes, and they need to be incentivized as well. You see, incentive models, and this is a very interesting topic maybe for people participating. 5 years ago, very few companies had in the bonus schemes, in the compensation schemes, they had attachment, very few had attachment to ESG performance on the corporate level. Now, more and more companies have that. So if you're a senior manager in a company and you want to sort of a cash out on what you have achieved over the year, and if you don't cash out, if you don't reach your ESG related targets, you will not get the compensation for that. So the companies are trying to create incentive models how to incentivize the leadership to do that.
Very interesting. Actually, it's interesting that you also brought ESG up because I know that in your line of work, when I was going through it,
Yeah.
you have clearly critiqued the current understanding of ESG, especially in terms of it being overly focused, say, on compliance, on monitoring, on sharing these reports, and excelling in that, right? Companies are excelling at creating these annual ESG reports in which they're showing all these data points to show how great they are at sustainability, right? But considering that A, there is political pushback nowadays, at least in the global Western landscape, against current ESG trends, and B, perhaps these reportings themselves are not the best incentive structures for companies to engage in sustainability. What shift do you believe is required towards how ESG should be incorporated in companies?
This is such an important question, one of the key questions for this entire industry. I mean, look, the ESG trajectory has gone from being voluntary reporting thing into regulated transparency reporting thing, which has led to the fact that companies now produce what they call integrated reports, 160 pages of paper with a lot of information. And these integrated reports are usually not integrated because they are two reports in one addressing a bit of a different things. And usually they are not really connecting, if the company is planning, have a financial strategy, and then they have a CO2 targets to decrease their emissions, how they're going to reach that with the financial side is usually not connected. So for us, it's still a sort of enigma. And what I wanted to say is that the regulation in Europe in particular has led to more transparency, but transparency for who? For the end user or for the financial industry like myself or NGOs who are reading these reports? So the key for us has been to tell companies, but what we want you to do is to address the key financially material ESG issues that have a real impact on your business. And from my experience, I mean, I don't know how many reports I've read over these 25 years, many, but it's usually two or three things that will make a big difference for the company. The rest is what I call noise. So what I mean with this is that we need to move from transparency for the sake of transparency, a lot of information, into something that is value creation. How does the company actually create values? And any company working with sustainability, if they ask themselves, you know, how can this create value for us? And if they don't have the answer for it, then they haven't done the homework. And usually when I ask this question, I tell you a very interesting story. I ask this question to any meeting I go to with the CEOs and CFOs around the world. How do they make money on sustainability? And it's a tricky question because some people will think, but it's not all about money. No, 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 it's not. But if it doesn't have, if sustainability does not have material value for the company, it will never be prioritized. It will always be a side sort of a gig, side business. And one more thing, the EU regulation and the current regulation around the world is not imposing on businesses to change their business model. So having a sustainability report but running a fossil fuel company still makes you sustainable. You understand what I mean?
Hmm.
So it's not forcing you to change your underlying business model. It's just force you to tell how do you deal with certain type of issues that are relevant to your business from sort of a framework perspective. So you have to think that the way how what we need to change is the way how we need to change how the businesses are structured, how the strategy actually works. And I always use this example. It's a very good example. So when you go and buy your products and services, your laptop, your phone, whatever you purchase you make, you don't read sustainability report before you do the purchase. You actually maybe look for the information on the product. So I have an iPhone, and in this iPhone that I had for 10 years, there is no single information about where can I recycle it, what kind of materials are in there, where are they sourced from, why is iPhone better from sustainability point of view than Samsung or Huawei, whoever. So this phone can almost fly. So you understand what I mean. So sustainability is not on the level where the products and services are, and that's one of the key things we still need to do. To move that to come closer to that.
So basically, A, transparency for
Yes.
transparency's sake does not fundamentally mean that it's generating
No.
value, right? They are not the same. And B, the strongest incentive structure for any entity to engage in sustainability practice is to see the monetary results accruing from the same, right? Thereby
Correct.
having the push to engage in said activities. Um, Actually, I'd love to go to your anecdotal experience now because I believe that's how people understand and appreciate the value of certain investing principles the most. In your case, say around north of 4 years, you shifted to Japan. You were one of the founding members of SDG Impact Japan, and you've generated strong value through, say, ESG oriented, ESG strategy based investing, right? How was
Yes.
your experience in terms of generating these returns from something considered more compliance oriented than business friendly
I
traditionally?
mean, yeah, look, I mean, for people listening to this, there are various ways, of course, you can do investments from sustainability point of view. I'll give you a couple of examples, easy examples. So either you have what it's called exclusionary approach. So you have a set of principles, that you say we don't want to invest in these kind of businesses. It's called negative screening. Yeah, you screen out companies. It could be, weapons, tobacco, alcohol, pornography, gaming, whatever, and fossil fuels. So you exclude that, and then you invest in the rest. That's fine. That's what most of the investors are doing. Then you have another approach, which is called best in class, that you look at the universe of the company, and you pick the best ones, then you put them in a portfolio and you invest in them. And then you have a third one, which is the approach that I'm using, which is a bit different. And this is why I went to Japan. It is to look on the absolute level for each company. What exactly is the driving the value creation for this company, and where does the ESG sustainability fit into that? So this approach, you can use it depending on resources you have, but usually you cannot invest in a lot of companies. So my investments are very concentrated. I invest only in 25 companies, and I've been investing in them since long time, so 4 years back, and I maybe changed 2 or 3 companies over 4 years, and it has generated very good returns. I mean, returns over 4 years and gross returns are 88%. It's a Sharpe ratio of 1.27, which makes this investment sort of a top quartile of ESG funds in the world. And it's not by accident. I mean, it's a hard work, because the way how we do it is that I actually meet management. We have 112 meetings a year with the management of 25 companies. So we are interacting with them all the time to understand exactly how they're thinking and what they are doing. So, and then you have another sort of a side of this entire space, which is good for people to understand. You have a passive and active investor. I'm an active investor, so I go in and talk, and we try to find a way how we can understand business better. Then you have a passive investors who are investing in indices, because it's a lower risk, it's a lower fee, they pay for that. And indices are constructed around the world, S&P 500, MSCI, ACWI, I mean, all companies, World Index, and so on and so on. And when you invest in index, you're buying basically a basket of companies, and you are mirroring that in your investments. And it can be everything. You're not picking and choosing. Of course, you can construct indices if you're big, but most of the people don't do that.
Interesting. I'd actually like to pick up on, say, an example within this, right? You're saying that you have 100 plus meetings with the companies, say, that you've decided to invest in, say, 25 strong companies that you've stuck to for a while, and it has driven, say, strong returns over the last 4 years, right? Uh, what is it that in these meetings that you're trying to get in terms of clarity from their management, that, oh, this company's in the right direction, or I like where the heads are?
Look, a couple of examples could be, I mean, we had a Japanese mid-cap companies, and maybe good to mention in this space that I'm investing in Japanese mid-cap companies, which are not the large caps, no big Toyotas. So smaller companies, still big, but smaller, where I believe there is the value that has not been generated on the market yet, based on sustainability. So that's my underlying philosophy. So what do we talk about? I mean, one of the meetings I recently had, we talked to semiconductor component producing company on how they can provide more third-party verification of parts of the semiconductors that is saving up to 30% more energy when used in automotive industry, for the electrical vehicles. What would that mean in terms of the CO2 and capital cost for them? So if I know that, that will give me also a good opportunity to understand how competitive they will be in 3 years' time when they enter new markets and so on. Aluminium company that we have been investing for since the beginning, that is increasing its recycling volume of the aluminium in Japan. Very interesting because the metal prices in the world, especially due to Iran war, and aluminium sort of components are increasing in price. Could be things related to health, human capital. Japan is traditionally seen, I mean, even in international rankings, as the country where equality is very low. So you have situations where you have the same type of job for men and women, where men get maybe 50% more paid for the same type of job. Contracts for women working in Japanese companies are different. They are much more loose in terms of what company can do. If they go to maternity leave and come back, they have to sometimes restart their career. That has been improving, but we've been talking a lot to companies about this. So My fund has a gender angle as well. So I'm looking at the gender perspective of the companies because I truly believe, especially in Japan, that the female participation, which is very educated participation on the human capital side, the strengthening the business over time. So we work with that too.
Right. So actually really getting into the nitty-gritties of how the companies are functioning, what is their approach to it, and does it resonate with, say, your approach towards sustainability, equity, etc. as well?
I mean, look, the companies, when I started 4 years ago, the transparency level was actually very low. But over the last 4 years, the Japanese companies are picking up very quickly. And I would say in some of them on environmental reporting and business sort of a materiality thing, how this is linked to the business, they actually outpass the many European companies. There is still a lot of work to do on the, social angle, human capital, human rights issues, supply chain management, third-party verification of supply chain audits and all of these other things that could actually create a lot of risk if things happen for these companies. Shift to the products and services, which is for me most important thing. How do you actually take all your sustainability thinking, your work, your reporting, all of that, and you bring it to the product? That's still a plenty of work to be done, and it's all over the world. It's not only in Japan. It's actually, aside of electrical vehicles, which is a product that is quite clear what it is, we don't need to talk about, supply chain. I've been to Congo 6 times in Africa to see the cobalt mines that I used to produce cobalt, then shipped over to China to refineries, and then shipped back to the Europe for batteries. I've seen the supply chain of the electrical vehicle industry. I know exactly how it works. But what I'm trying to tell you is that on the product level, you need to sort of bring it down and see, okay, what part of this can we bring into the product?
Right. Uh, I think this does connect to another issue, which is generally of energy security, right? Uh,
Yes.
we understand that in the current geopolitical landscape, there are a lot of volatilities. There's, say, civil wars. There's incursions on others' territories, etc. Right? There's a huge rush in order to procure the sort of energy sources which can still power nations, right? While they're competing with each other in so many economic, military parameters, etc. Do you believe that's a the prerogative of a nation to ensure energy security versus still adhere to their climate ambitions are at odds with one another, or do you believe that these two aspects can still be reconciled?
No, I think in many cases around the world, this is especially for developing countries, this is a sort of a match that could make them more independent and stronger going forward, especially on the renewable energy side. And it's a couple of numbers that are interesting in this context. I mean, look, there's about 700 million people in the world still without electricity, most of them in Southeast Asia and Africa. I think 1.4 billion people in the world do not have access to financial services. So you have to think that, despite the fact that we are going to the moon and we have the biggest IPO to go into Mars, we still have a lot of things to deal with on the planet we're actually living on. So, I mean, in terms of geopolitics and especially on the energy side, I mean, given the fact that you have the competitiveness of renewable energy pricing to compared to the fossil fuels, I mean, generated energy, you can clearly see that this is picking up the pace. I mean, countries in Southeast Asia, even Japan, are strongly thinking, in Japan at least, I mean, going back to nuclear is one part, but then developing geothermal energy is a big one in Japan. You have a lot of discussion about the fusion. I mean, solar is so cheap today in the world that you can actually, across the world, I mean, very price competitive. So I think many countries are thinking today, probably they're not doing that in the short term, but in the long term, you will see much more investments in strategic sort of renewable energy in, non-dependency on what's going on outside.
That's interesting, Sasya. Uh, I believe it's also very instructive to see what the audience might perceive in terms
Sure.
of, uh, say, factors shaping business prerogatives in the coming years, right? So the poll that I'd like to launch now is: which force do you believe will have the greatest impact on business over the next decade? And I know we've had this conversation before, so
Yes,
I request
yes.
you that we pen this discussion till post
Yeah,
the
yeah, yeah.
results. All right, I'm closing the poll in 10 seconds. So if you haven't cast your poll yet, please do vote. All right. So as we predicted, I think before the conversation start as well, uh, the highest balance seems to tilt towards artificial intelligence, followed by climate and sustainability challenges, geopolitical instability, and finally, demographic and workforce shifts. So I'd love to see your deconstruction of this one.
No, this is, I mean, look, I do a lot of speeches and seminars around the world, and this is also very interesting. Artificial intelligence, yes, it will change a lot of things and impact businesses over the next ten years. The question is, to what level will we be able to manage that shift? And that's the big question for the businesses as well, and actually much bigger question for politicians, if I'm to be honest, because I think this may create a huge social push in different countries around the world in terms of the socioeconomic welfare for many countries and many industries. And in terms of the climate change and sustainability changes, yes, we are, despite the fact that we have committed ourselves to do a lot of things, emissions are increasing and the consequences are becoming more, tough for people around the world, especially, in the countries that already have a lot of challenges. Increasing heat. Just to give you an example, 2 years ago, there was a big heat expo in Japan. And what it actually means is that I actually went to see it, and the expo was all about how do you protect workers from heat. And you had cases, I think it was last year, in the country like Japan. I think about 35 people died of the workers died of heat because they were not managed in a proper way. So, climate change is not becoming as a climate changing. Yeah, climate has been changing, but the consequences are becoming quite visible. Geopolitical instability. Yeah, we've been living in a geopolitical vacuum a bit. Cold War after that, after 1990s and Soviet Union collapse and all of that. But it has always been conflicts around the world. So I think it's going to continue. You will have the big powers trying to muscle the way forward. Who's going to dominate in what way. And then you have the rest of the world who will try to sort of adopt to that. Still, it's been there before. It's going to continue. Demographic workforce shift. I'm a bit surprised with this. I give you an example. One third of everybody in Europe, 2030, will be over 65 years old. It's the numbers in China and numbers in Japan are not looking very good. There are countries like Italy and Japan in particular with the big demographic challenges. I mean, the real challenges, not really enough people to sustain the economy of the country. And I think in Europe, this is going to be a big, 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 big challenge. You have a European Union with a very strict rules and regulations regarding the immigration right now. It's a lot of pushback from the populist parties and so on. But eventually, you will have the situation where you would need to do a targeting immigration back as they did in 60s to support your economy. And where would that come from? It's a big question. Is it Africa? Is it Southeast Asia? Is it India? Is it South America? It's difficult to say. But I think demographic challenges are quite big. Also, one important thing for if you're looking at it from a financial point of view, demographics and changes in Europe will also impact the pension schemes and the pension systems, and that will impact the general welfare. Of course, the time lag is at 5, 10, 15 years, but down the line, it will have a significant impact on people. And demographic changes in China are quite obvious. I mean, I think Chinese Communist Party that runs the country has been quite clear that this is it's sort of a economic challenge for the country going forward.
Right. This is quite instructive because, say, even in India, it has been the fastest growing nation, like in terms of its population size. But now the fertility rate has fallen below the net replacement ratio. I think that was around 2.1. So over time, that these demographic trends would reflect, I'm certain, across the developing countries as well over a longer time horizon, right? So
Yeah, the only continent, I mean, that will have the human capacity to support this is Africa, where I think that the percentage of African population will go up from I don't know what is today up to maybe 11, 12, 13%, even more, and a young population in many African countries. So and that goes back to the sort of a AI. So, if AI is aside of demographic, is AI is going to replace a lot of entry level jobs in developed countries. How will this impact, economic stability of the countries and social welfare in these countries that we already know is under the big pressure? Yeah.
Right. So I'd like to ask you, if you were, say, advising a multinational company today, right, which was trying to, say, project into the next 10 years and lay the overarching vision, goals, strategy, etc., which of these trends or stressors would you say would concern you the most that that company should look out for?
I mean, look, it's inevitable to say in the world that we live in today that artificial intelligence is a big topic, and it's going to continue being a big topic for the next 50 years, probably next, not even, I mean, 10 years is a short period. It has a tremendous power, but also with power comes responsibility and accountability. And as we know today, it's not really accountable. And politicians are not really there in terms of the regulating it and making it actually work for humans in the way how it can protect humans and help us and not really control us. And this is going to be a big thing. Climate change, look, I mean, given the fact that we are increasing the CO2 level still very sort of a clearly in the trend is quite clear. We are not shifting underlying business models. We are not really cutting out dependency on fossil fuels. We are still investing. I mean, some of the big banks have increased their lending and investment since Paris Agreement 8 times. It's quite clear that that is going to be a continuous big trend or risk that we will need to have a look at. And in the same time, if you're thinking that, okay, but if you take artificial intelligence, I mean, if you apply it in agriculture, which is stand for maybe 17% of all the emissions in the world, CO2 emissions, it could actually increase efficiency and it could increase accuracy. But on the other hand, then you have the AI using energy, using water resources to cool down the systems, which is something that needs to be resolved. It's not resolved today, I mean, at all. So you have, it's a very multipolar, complex world we are sort of entering in. And, it's going to be a lot about adaptation, but also I think politics will probably need to step in much, much closer than they did before.
Right. I'd actually like to uh, pick your perspective on AI a bit more, because I know you have talked about, say, the environmental costs of AI previously as well. It's something you've worked on, you've discussed, you've written about. Uh, but at the same time, organizations across the board are adopting AI as a part of their, say, standard operating procedure, right?
Yeah,
There have been
yeah,
companies utilizing these large language models, which are now unicorns in the Silicon Valley, right? So the
yeah,
idea is that certainly AI is not going to be displaced as an emerging trend for any time to come, right? How
yeah.
should an organization balance these sort of productivity gains with the implicit sustainability implications that AI entails? Do you believe there's
It's
a resolution here?
it's Yeah, I think it is. I mean, I think it is. But the first question is, what exactly do we want AI to help us with, not what we want AI to replace? It's a very important distinction. So we need to use it as a tool that helps humans, you know, uh, work more efficiently. But the efficiency does not replace answer making decisions or making, responding to the right questions in this context. So helping us to conduct what we have set out our strategy is in the environment where we are operating. And in sustainability context, I mean, AI can be very helpful in helping companies to understand where exactly on a product or service level they can increase efficiency, cut the cost, improve emissions reporting, or find the data that company needs. So from that perspective, yes, there is an interconnect here, but it also needs to be done in a very moderate way, because you have to bear in mind one thing: the current language models we have, what we call the AI, it's controlled by a handful of companies and handful of people around the world, and right now not regulated in a way it could be or should be. So we are also creating a world with this new IPO, with the SpaceX and Starlink and all of these things happening outside in the space. We are creating a new industries, almost analogy going back to when they were building, railroads in US or other parts of the world, new sort of a railroads into creating completely new industries. And we actually don't know right now what the biggest consequence of this will be. It's very difficult to see because it goes very fast. So I think it will be very wise to take a step back, to do this much slower, and to have time to really sort of a process what exactly can we use it for that can help us to do what we need to do to improve things in the world. I mean, if you hook the SDG development goals, 17 development goals, with the AI and say, okay, where exactly in the world do we need to, could we do things to really make a difference? How do we get 700 million people electrified? I mean, electricity. How do we create, more secure, safe, balanced, gender equal businesses? These kind of things, instead of how to maximize profit all the time, how to maximize capital allocation. It's new extractive industries, new extractive models, but the AI is extracting your data. Every time we use it, we give it something. And it's sort of it's extractive, new extractive models. It's like mining or oil and gas extraction. Now it's data extraction, it's your brain extraction.
It's extremely concerning, and I think the insight that you offered, that applying a first principles approach of what are you exactly using it from, and then working away from there rather than just utilizing that as the ad hoc solution to every issue, uh, might be a wiser step forward.
Yeah, taking the step back in the organization, deciding, okay, we're going to use the AI for this particular thing. We have difficulties because of the lack of data or whatever. And then, working over time with it to see exactly how you can then use it a bit more, develop it a bit more so it fits what you need instead of using it for everything. I mean, people are using AI today to write emails. Uh, and in a cognitive level, for us humans in 10 years time, I mean, we are not even be we're not going to be able to think ourselves. That's not the world we want.
Of course, there's always concerns, right, in terms of are we becoming cognitively challenged because of our over reliance on AI for even the most mundane of tasks, right? So uh, hopefully that does not become a very strong issue at this
But
level of species.
yes, but we have to fight back as well, because there's one thing about this which I think it's so interesting, and I have to mention it in this context. You see, the AI fits very well in this neoclassical description of the human being as a consumer, not as the species that has a feelings, thoughts, ideas, experiences. We are just consumers, and we are not even voters anymore. We are sort of offered options on the market. So if you vote for me, you get 13% discount on your taxes or whatever. Uh, and AI fits really well into that sort of a picture, because we are just consuming. We are consumers and nothing else. But we need to fight back, because we are much more than consumers. We are citizens. We are voters. We have families. We have friends. The world is the local communities where we operate are as much as important as anything else. So people need to sort of start looking at this from a perspective: what are we offered, and what are we giving, and also what are we getting back? And and I know that AI is manipulating pictures, newspapers, media, social media, and so on. Do we really need that? Do we really want that? Um, that's a big question.
Actually, I know I'm conscientious that we're a bit short of time now, Uh, so I would like to focus more on the individual themselves, Uh,
Yeah.
say our sample audience member, right? What they really want to know from this conversation would be insights of different perspectives on sustainability, emerging trends, and also, in a way, future proofing themselves, right? Considering that in current landscape, there's technological changes, there's changes in perspective towards global events, there's economic uncertainty, there's so many evolving trends, right? Do you believe that there are specific mindset shifts or adoption of certain skill sets that people can do in at this junction to future proof themselves?
I think it is, and probably the starting point is that, and I've used it so many, I mean, throughout my life, as one of the starting point. Don't be afraid. I mean, don't be afraid of standing up for what you believe in, and also don't be afraid of raising the questions that are uncomfortable, both to businesses and to leadership or whoever. But also, I think one of the important thing is that it takes time to really sort of get things done. And if somebody tells you that, uh, young people, young generations have this mindset of I want to advance, because career is a very important thing. You want to advance, you get more money, you get more seniority, you do more important things, and so on. But it takes time. Give yourself a perspective. To be a good carpenter, to be a good analyst, when I say this, it takes 5 to 10 years. It takes time. And people think, but well, time. I want to do this in next 2 years. I want to be a manager in 3 years. That is what we have been sold, but that's not how it is. It takes much longer time. You need to have more experience, and you need to test your ideas, your views, mature in the way how you approach things. And in sustainable investment, it's the same thing. I had many experiences hiring a lot of young people, analysts, coming out of the financial business schools, telling me after a year they want to have a promotion, they want to have a manager job, they want to move on. And then when you tell them in their face that it takes 5, 10 years to be very good analysts, to really understand your companies, they get really scared, because that's not what they have expected. But and I think also one thing that people very often forget is that there is so much knowledge out there in the companies. Just ask questions. People are sometimes afraid of asking questions. No questions are dumb. Ask questions. Try to understand the perspective. Try to understand what you told. Try to process that in your view, how that fit with the picture that you have. So it's and humbleness. Humbleness is very important. Be humble. It's not all about profits and greed and money. It's important. Yes, I agree. But the way it's and the process and the journey is much more important.
Thank you so much for sharing that, Sasya. So recapping what I've understood from our conversation so far has been that there has been a radical shift in terms of how sustainability is perceived. It is not, say, explicitly only focused on compliance, monitoring, reporting, but also fundamentally value creation. And the more organizations, entities focus on that, understand the long-term horizon of, the how they can accrue better returns, as in your own, say, anecdote that you mentioned over the past 4 years that you've been working and building on, the more they are likely to benefit, and not just, say, focus on the ethical or value based reasons, but also the economic reasons that capital investing in the right dimensions will lead to sustainable outcomes as well, rather than always moralizing the issue.
Correct, and one of the, and I completely agree with your summary. And I think if you look at sustainability as a area, if you come from the right side, populist side, or left populist side said it's all greenwashing. The right populist side said it's woke agenda, it's political agenda, but reality is somewhere in between. And the companies are in reality, and they are facing challenges and opportunities. And if you understand how you can help them to manage risk and capitalize on opportunity, you are in the right spot. That's where the spot is. You take off the noise, you take off the populist agenda one, populist agenda two, and you focus on reality. So if I ask the CEO of a company, if we just skip all the ESG, we just skip your sustainability, we just trash your sustainability into the box, we say you never do it again. Then they look at me and said, but no, it doesn't work like that. We cannot do that. And I asked him why, because we need this and we need that. We cannot skip this. You understand? It's like inverted way of doing it. So we just say, okay, we skip that. You throw away sustainability. You fire the people working with it. Oh, we cannot do that. We need to have a health and safety person. We need to have somebody that works with our carbon emissions. We need to have somebody that works on a product level on developing energy efficient product that has this mindset. So it's not really about me thinking this is the right thing, moral thing to do. It's more about company actually thinking, okay, how can I protect my competitive advantage going forward?
And that is an extremely instructive conclusion, say, or a key takeaway, I feel, to take away from the conversation, at least for myself, and I'm assuming a lot of the attendees as well. So, Sasya, thank you so much for taking out the time today.
Thank
It
you.
has been an
Thank you.
extremely interesting conversation for myself. And thank you so much to everyone for joining us. It's been an absolute pleasure.
Thank you very much, and I wish you all the best. And as I said, don't be afraid. We move forward. We can do it together.
Take care, everyone. Have a lovely evening.
Thank you.